Hello everyone, welcome back to my channel. If you're new here, I'm Stephanie, your favorite real estate agent and loan officer. I want to just come to you with a quick video and we get right into it. I want to talk to you about the top things that you need to look out for or prepare for to make sure that you're mortgage ready. You know, a lot of our big dreams to be able to purchase our first home or our first investment property, and so you just want to make sure that you do some preliminary things to make sure that you can secure that financing that's going to help you to achieve that goal. Do is make sure that you have a decent credit score. When I say decent, I mean at least a 620. Now, you can get pre-approved with a lower credit score, like a 580, but ideally the minimum credit score you want to shoot for is a 620. It gives you better chances of, first of all, getting pre-approved and better terms and rates. If you want to get those extra bonuses when it comes to getting those ideal rates and terms, I would say shoot as high as a 700 or a 720. The next thing you want to make sure that is in place or that is good to go is your debt to income ratio. You want to shoot for anything lower than a 43% debt to income ratio. Now, by lowering your debt and increasing your income, this can definitely set you up for success when it comes to having a lower debt to income ratio. Make sure that it strengthens your overall approval. Lenders typically look for 43% or lower debt to income ratio. By increasing your income and or lowering your overall debt, this can strengthen your chances of getting pre-approved. The next thing you want to check for, or the next thing you want to make sure that you have in place before you even speak to a lender, take some time to evaluate your spending and make sure that your budget is in place so that you can save for a down payment and closing costs. Now, I typically advise my clients to save about 10% at minimum for down payment and closing costs. Yes, there's things out there like down payment assistance, and yes, sometimes we can negotiate a seller to include some seller's credit to help with your down payment and closing costs, but you always want to be ready to make sure you have those funds ready for yourself, just in case either of those things do not come through for you. You can have a down payment of 10%, but ideally, just to be quite honest, having a 20% down payment is better, because the more you put down, especially at least 20%, you avoid PMI. PMI is private mortgage insurance, and that literally just covers the lender in case you default. Adding that private mortgage insurance does not help you in any kind of way, but it does add about $40 to $50 or even higher to your monthly payment. So the more down payment you can have, it can strengthen your pre-approval chances if you do have reserves, because then they can use that as one of the qualifying factors. The fact that you're not spending every dime on this closing, but you also have extra money set aside as well. The next thing you want to make sure is that you have stable income. 2-year employment history is the minimum. It doesn't necessarily have to be at the same job, but it does have to be consistent with no gaps. And ideally or preferably in the same industry. And you definitely don't want to skip from W-2 employee to a 1099 employee. Doing that will cause you to have to have 2 years consistent in either category. So if you're W-2, you need 2 years of W-2 income. If you're 1099, you need 2 years of 1099 income. You can't combine the two. So have a minimum of 2 years employment history. The next thing you want to do before you go and get pre-approved to make sure you're mortgage ready is to know what program you want to apply for to begin with. Now, you can pick a lender's brain and try to make sure that, or try to ask the questions and try to get some suggestions of what program might work for you based on your specific circumstances. But if you're not ready to go that route, you can always do a Google search. Type in what your specific situation is, and then it will suggest some mortgage options for you. Now, of course, you want to pick one or two and set yourself up with those requirements, like what's the minimum credit score you need for FHA or USDA. Most lenders do multiple types of loan programs, but they have their own parameters for minimum credit score. So that's where you do want to get with a lender. But I tell you, if you make sure that you have that 640 credit score, you pretty much have no qualifying for the majority of the loan programs that's available. And the last thing that I want to touch on is evaluate your long-term goals when it comes to your long-term financial goals and also your long-term personal goals. When you're purchasing your home, it might be more beneficial to you to purchase your primary residence first, or you might decide that, hey, I don't mind being a renter for a little while. It's more important for me to build that wealth first, and therefore I'm going to use my first purchase as my investment property, which is what I'm personally doing. I'm trying to purchase my primary residence first. It did not work out. I took that as a sign from God that, hey, maybe we need to switch gears. And so therefore I decided to focus on my investment property over my primary residence first. So that being said, that is all I have for you. I just wanted to remind you, check on these key factors before you go ahead and get mortgage ready, or to make sure that you're mortgage ready, and therefore it'll make the process all that much smoother. Thank you so much. If you enjoyed this video, I want you to hit that like and subscribe button, and also leave a comment. Let me know some questions that you might have for me. I definitely want to gear this channel towards answering all your questions, real estate related, personal finance related, mortgage related. Let me know in the comments below, and I will try to read them all, respond, and pick some good ones to make a video about. Until next time, thank you for joining me. See you later.